Hey there, this is Champion Trader Kevin Davey, and today I'm going to talk to you about what is a trading algo. So let's get started. So let's start with the basics. What is algorithmic trading? You might have heard that term and wondered, what's it all about? Well, an algorithm is just a step by step set of rules, operations that are just performed. And when you put it in a computer, it's just a set of programmed rules that you follow. In trading, in algo trading, it's just a set of calculations that you make to decide whether to buy or to sell or to take a profit or hit a stop loss. And anything can be made into an algorithm. So it could be a moving average, it could be some kind of candlestick pattern. Now, a lot of people think that it's got to be high frequency trading where you're trading thousands of times a day. That's an algorithm. Well, it is, but that isn't it all an algorithm is. An algorithm can trade once a week or once a month, even. It's just a set of rules to tell you when to buy or sell. And when you look at it that way, it's pretty simple. Just rules to buy, rules to sell. And you program them, and then you follow them, or you, better yet, you have the computer follow them and you can automate them. So it's pretty cool. So if you're looking at the way you're trading now, do you look at a chart every day and decide when to buy or sell? Well, that's probably what's normally called discretionary trading. And maybe you have some guidelines or rules and say, oh, when this certain candlestick pattern shows up, well, I'm more likely to buy. That might be kind of in this gray area or this hybrid area where it's you still use discretion, but you also use rules to trade. So that's kind of like an algo with discretion. And that's the second point there. And then pure algo is you just program the rules and you let the computer tell you should you buy, should you sell. You don't overrule, you don't use your discretion, you don't stare at a chart all day. So those are like the three basic types of trading. And what I do and what I teach and what most of my students do is the last one, which is more or less pure algorithmic trading. And you might have heard of it as a bunch of different terms. It might be called mechanical trading, rule based trading, systematic trading. Over the years, the terminology has changed, but the key point is still the same where you create rules and then you follow those rules exactly. And, on the surface of it, it sounds pretty easy, but it's actually really hard to do. It's really hard to follow rules exactly because human judgment always wants to get in, and you always think you know better than the algo. And I've found out the hard way that's not a good thing to do. The best thing to do is to always follow the algo. Now, I mentioned it's computerized, but hey, when I started out algo trading, it wasn't called algo trading, but I literally was calculating moving averages by hand, where I was getting the numbers for the daily prices from a newspaper, a print newspaper. That tells you how far back my trading goes. And I was doing it on a calculator, but it was coming out with rules, and it would say, tomorrow buy or tomorrow sell short. That's algo trading. And it could be a PhD writing these super complicated codes for a hedge fund. That could also be algo trading. So there's a wide range of what algo trading actually is. And the key point is I think a lot of people get intimidated by the word algo because it's kind of sounds a little scary. Algorithmic trading. Um, it doesn't need to be scary. Just think of rules to buy, rules to sell. In other words, rules to trade by. And if you just focus on that, I think you'll be pretty good at knowing what algo trading's all about. So here's an example. This is pretty simple. This is TradeStation code, and you can read it, and it's pretty simple. It says buy a certain number of contracts, the next bar at the highest high on a stop. And that's just a simple breakout. And then you sell short if the exact opposite happens, again on a stop. So that's just a stop entry breakout. That in itself, those two lines, once you define the number of bars back you're looking at and the number of contracts you're trading, that's an algo by itself. You don't need anything else. That could stand alone. Now this one you'd be in the market all the time because it would either buy or sell short and stay in until reverse signals hit. But that's an algo. And in this case, this is what it looks like for gold. Not bad for such a simple code. Now, obviously, you can get a lot more complicated. That's something I teach in my course. It's called the Strategy Factory course. It is a methodical process to help you build and test strategies the correct way and then to automate them. And it's been proven through my trading and students' trading over the years. It's been proven in the market to work. So if you're thinking about algo trading, consider learning from me. That's all I have today. Thanks for watching. Have a great day.